What's going on, everyone? Welcome to another video of my Let's Study QuickBooks Online Certification series. So this is episode 13, I want to say, and we're just going to continue where we left off. So let's see what I'm looking at. Head over to QuickBooks Online Accountant Training. Let's move over to supporting small business clients. And also, I think I forgot to open up my Excel. Let's see. That's the wrong one. Let's see. Excel. Oh, when was this opened? Tuesday. Let's open this one up. Okay, just for my notes, I've opened it up to the side. And let's get started. So we are at supporting your small business clients. And this module explores the ways in which you can support your small business clients and will refresh your knowledge of best practice workflows. Learn how to utilize the features of undeposited funds, estimates, purchase orders, vendor credits, credit memos, and customer statements. As well as diving deeper into best practice workflows, you will also discover how to make the best of the deposit transactions online, payments, journal entries, and transfers. Okay. So let's keep it moving. The next section is deposit transactions. So this is purported to be 5 minutes. We'll see if it takes maybe 10 minutes. Okay. Deposit transactions. The story so far. Chris has taken out a small business administration loan to help get things started and provide some working capital for his new company. The bank has sent him a check and now he needs to record the deposit into his checking account. How can QuickBooks Online help? In QuickBooks Online, you can easily categorize deposits like refunds or proceeds from loans so that they're not confused with sales income. Hey, Miss Pearl, welcome. Good to see you. How have you been? Let's see. Deposits like refunds or proceeds from, or in QuickBooks Online, you can easily categorize deposits like refunds, proceeds from loans so that they're not confused with sales income, and so that taxable and non-taxable income are separate and in the right place. Okay, let's look at how this is done. Learning outcomes. In this lesson, you'll learn how to 1. Recognize how to use and view deposit transactions. All right. So yeah, Miss Pearl, I'm just like doing a little bit of studying and decided to share my studying with the rest of the world. So may not be too interesting for some folks, but yeah, I mean, just something that I wanted to do. How are you doing? All right. So let's continue with this lesson. Continue lesson. Understanding deposit transactions. Along with grouping existing payments in undeposited funds into deposits, understanding, let me start that from the beginning. Understanding deposit transactions. Along with grouping existing payments in undeposited funds into deposits, deposit transactions are also used for adding new deposits for activity not related to sales transactions, such as when a company receives funds from loan proceeds or contributions of cash from owners. When company receives a refund from a vendor and wants to record it directly against the expense account or to a refund received income account. When a company doesn't record income using sales transactions, invoices, or sales receipts and wants to record deposits directly to income accounts. Oh yeah, it's great to be live. I mean, honestly, going live and doing these streams helps kind of encourage me to actually do this studying. Why? I guess because I'm like, being held accountable kind of to do it. And I'm also like, taking kind of, record of what I'm doing. So it feels like I'm producing something when I'm studying. But yeah, really cool stuff. But let's see, what do we have here? And I want to say it's good to see you too, Miss Pearl. It's always a joy to see you around. So let's see where we're at. When an employee reimburses the company and the reimbursements need to be recorded against the employee loan receivable account. When there is a tax refund, this screen is where you record it in the tax refunds account. All right. Chris's small business administration loan check is a good example of the first category, which is when a company receives funds from a loan proceeds to or contributes or contributions of cash from owners. Put simply, this is money into the business that is not subject to sales tax or income tax, and that doesn't have to be matched to a sales receipt or invoice in QuickBooks Online. It does, however, need to be recorded and categorized to the appropriate account on the chart of accounts. ProAdvisor tip: you can add multiple funds to the same deposit. For example, it might include both customer payments and other funds in a single deposit. Continue lesson. All right, so we have a video over here. We'll just read the steps really quickly and then watch the video. Recording a deposit transaction. Chris needs to record the deposit he made at the bank for the loan's proceeds, but he needs to make sure it is a separate category for from his sales income. Let's see if we can help. Watch the video to see how it's done. The individual steps are below for you to follow. Changes in the UI may not be reflected in the video. So first, go to the plus new button and in the menu select bank deposit, just like we did for recording the sales deposit. Add a date, 9/4/2018. Specify the account as checking. In the add new deposit section, enter deposit details received from small business bank. For account, select SBA loan payable. Note that this is a liability account, so this deposit will not be classified as income. Add the description. Make it proceeds from loan. Payment method is check. Enter the insurance company's check number 5487 as the reference number. The amount should be $25,000. Now select save and close. So now let's watch the video.
Go to the Create Plus icon, and in the menu, select Bank Deposit, just like we did for recording the sales deposits. Add a date, 09/04/2018. Specify the account as checked. In the Add New Deposit section, enter deposit detail received from Small Business Bank. For account, select SBA Loan Payable. Note that this is a liability account, so this deposit will not be classified as income. Add the description. Make it proceeds from loan. Payment method is check. Enter the insurance company's check number 5487 as the reference number. The amount should be $25,000. Now select Save and Close.
All right. Awesome stuff. Okay, continue lesson. Lesson check. Which of the following would be a suitable situation for recording a new deposit transaction like we've seen? Okay, so let's read the answers. You need to record a payment for a customer, but it's not a check from a customer, but it's not a check. No, I don't think that's correct. You receive a tax refund from the IRS and need to record it. Yes, I think that's it. You receive a cash back payment from a vendor for ordering in bulk. Yes, I think that's true. There we go. That's right. A tax refund or a cash back payment would be a perfect example of the need to record money coming in that isn't matched to an existing payment. Other examples of when you might enter a deposit transaction include employees paying back personal expenses or paying back funds loaned by the business. All right, next. ProAdvisor challenge. Okay. So a practical example or practical case. For our ProAdvisor challenge, we'd like you to record a deposit transaction for your client Craig. Select the headings to find out more. The challenge. So we're going to open up this over here. Go to Craig's file using the link and use the information to record the deposit transaction. The details. Craig has received a refund from his insurance carrier for $30. Okay, so what we're going to do here, we're in the example that we watched, they have like a plus button over here, but that's not here. So I'm not sure how they get to that. Maybe it's in customers. Sales, customers. No. All sales. New transactions. Deposits. Where do we do deposits? Maybe banking. Is this it? Let's read the examples over here. How to do it. Steps. Go to plus button, but there is no plus button. I think that may have been like the old user interface. They've changed it since they've made those steps in that video. So what do we have to do exactly? Deposits. Okay. How do we do that? Let's see. Deposit. Let's see, bank deposit. We need to find bank deposit. Bank deposit. Maybe it's under banking. Not there. Let's see where this could possibly be. Bank deposits. Has to be here somewhere, but I'm not sure because the examples we were given it's not included here. It's supposed to be some sort of plus button up there, as you guys can see from the video.
Go to the Create Plus icon.
There's supposed to be a plus button here, but I think that's like the old view.
Select bank deposit, just like we did plus icon. And in the
So bank deposit might not even be called that anymore, but I have a feeling that it is. But let's try. Oopsie. Okay. So we're just going to skip that part for now because I don't want to spend too much time wasting on that. So let's continue for now. But this would be the normal steps. Okay, summing up. Learning outcomes, well done. In this lesson, you've learned how to, one, recognize how to use the view deposit transactions. Okay, so we'll just continue for now. Let me check here, actually, if we have some. Nah, I don't want to waste too much time. We'll do that. We'll figure it out another time. But I want to. So, okay. QuickBooks Online Bank Deposit. Let's see. Let's see if I can figure this out really quick. Nope, I can't. How to QuickBooks Online. Let's see. Sorry for the delay. Okay, quick create menu bar, but I don't see this quick create. Yeah, we'll figure it out another time. But anyway, let's keep it moving. Okay, so moving on to the next. Yeah, definitely. That's something that we are considering. That'd be pretty cool, Miss Pearl. QuickBooks Payments. Okay. Let's see. QuickBooks Payments. The story so far. And how's everything going with you, Miss Pearl? Are you doing the gig apps still? QuickBooks Payments. The story so far. Chris is hoping that many of his customers will pay him electronically for the products and services he provides to them. It would save him some trips to the bank and would be easier for his customers too. Plus, once everything is set up, payment information goes straight into QuickBooks Online automatically without the need for manually recording transactions. It's super easy for both customers and for Chris, and it's always a good thing to make it easier for customers to pay on time. Chris is a little new to this, so could use some help in a few areas. How can QuickBooks Online help? You've already helped Chris enable QuickBooks Payments, and now it's time to show him how easy it is to record electronic payments made by a customer. We'll see the process on the Receive Payment screen. Learning outcomes. In this lesson, you'll learn how to 1. Recognize how to utilize the features of QuickBooks Payments. Topics include payments via invoice and sales receipts, how QuickBooks Payments works, and recurring payments. All right, so let's continue this lesson. QuickBooks payments via invoices and sale receipts. Remember when Chris was set up to accept digital payments through QuickBooks Payments, we selected the bank account where customer payments would be deposited. When Chris creates an invoice, he can select the way he'd like to get paid, credit card or ACH or both, and then send the invoice via email to his customer. When the customer selects the View and Pay button to view the online invoice, they will then see the option to select the Pay button. The great news is that any payment made here will be recorded automatically in QuickBooks Online. Sometimes Chris will be paid by his customers at the time of sale and won't want to create and send an invoice. In these cases, he just needs to create sales receipts that will allow him to record both the sale and payment on the same screen in QuickBooks Online. He can then email the sales receipts to his customer so they have a record of the sale. Creating a sales receipt. Chris begins the workflow by selecting the plus new button and then the sales receipt in the customer column. After completing the customer and sales details, he'll select credit card as the payment method. Chris can then enter the customer's credit card or card details and can send the receipt via email or print it out. It's that simple. Let's see how it works. Okay. And this is a screenshot picture of that. So let's continue this lesson. How QuickBooks payment work. So how does QuickBooks payment work for Chris's customers? Let's see. Select the steps to find out how it works at each stage of the payment process. Step 1. Invoicing. Chris has invoiced Brad Hall for an emergency call made last night. Brad created an invoice and emailed it to Brad for payment. Okay. And this is the invoice that he made. Step 2. The customer receives the invoice. When Chris sends the invoice to Brad, the status is updated to Sent on the Invoices tab in the Sales Center. Brad receives the email and is able to tap Receive, Review, and Pay to view the invoice in the browser and make payment. And this is what he would receive, and you could click right here, Review and Pay. Step 3. The payment process. Brad can enter his payment information, debit card, bank transfer, or credit card, and select Pay $125, which is done right here. Step 4. Payment confirmation. Chris will receive a notification of the payment too. If he uses the mobile app, a notification will pop up on his mobile device, and he will also receive an email notification of the payment. The payment status will automatically be updated in the QuickBooks Online. There's no need for Chris to record the payment or the deposit. QuickBooks Online does it all for him. Okay. That's great. So let's continue this lesson. Recurring payments. If Chris has a customer credit card or bank information on file and has authorization from the customer to charge a recurring amount, he will be able to create sales receipts that automatically book the sale in QuickBooks Online and deposits funds into his bank account. For Chris, this is a great way of automatically billing and getting paid for services that are, say, monthly maintenance plans or service agreements. Select the gear icon, then recurring transactions, and you and Chris are ready to go. Select new to set up a new recurring payment. Then set the interval and even a start and end date. Watch the animation to see just how easy it is. Alright, so let's watch this video.
You can even set up QuickBooks to automatically charge your customer a set amount at regular intervals. Here's how. Enter the customer who's paying you for something. You can select a customer or create a new one. Now, enter the product or service you provided for this customer. Now you can fill out the rest of the receipt. Select credit card as the payment method. Now the important part. Click Make Recurring. Give the transaction a good name, one you'll recognize. Choose Scheduled as the type, and then pick how often the payment should happen. For example, you can tell QuickBooks to create a sales receipt every week on Wednesday. Make sure you enter the start date and how many times you want to charge your customer. Finally, click Save Template. To make this legal, you'll need your customer to sign an authorization form giving you permission to charge their credit card automatically. That's it. Now it's your turn. Set up QuickBooks Payments today.
All right. So let's continue this lesson. Lesson check. Before a client sets up a recurring monthly charge for a credit card or ACH, Visa, and MasterCard, what do you or your client needs to do to make the process compliant? You need to get the customer to sign an authorization form. Check answers. That's right. Before a client sets up a recurring monthly charge for a credit card or ACH, Visa, and MasterCard, guidelines require them to have written authorization from the customer. The authorization form comes up automatically when saving a new recurring sales receipt. So summing up, learning outcomes. Well done. In this lesson, you've learned how to recognize how to utilize the features of QuickBooks Payments. ProAdvisor tip. Recurring payments can be a great way to keep on top of regular invoicing, but remember to edit them if a customer's contact details or payment plan changes. In the next steps in the next lesson, you'll work with Chris as he gets to grips with journal entries. All right, sounds like interesting stuff. So let's zoom back out, see what we got going on over here. Journal entries. It's gonna be 5-10 minutes probably to complete that section. How long have you been running here? A little bit under half an hour. So let's resume and see if you could get that portion completed. Okay, journal entries. The story so far. Chris needs some equipment to run his business, and so he's using items that he already owns to get started. But Chris wants to make sure the equipment donation to the business is recorded. So how does he log the contribution? Let's see how you can do just that. How can QuickBooks Online help? Journal entries are a way to post debits and credits directly to accounts in the general ledger. Using sales and purchase forms to record income and expenses is the preferred method, but sometimes the use of forms isn't appropriate. Using a journal entry is another way to adjust account balances. Learning outcomes. In this lesson, you'll learn how to, 1, recognize how to utilize journal entries. Topics covered include when to use journal entries, creating a journal entry, adjusting journal entries, and ProAdvisor challenge. So, continue lesson. When to use journal entries. A general journal entry is an accounting transaction that is posted directly to the general ledger. For example, if Chris's tax accountant sent the annual depreciation on the equipment, Chris would use a journal entry to debit depreciation expense and credit accumulated depreciation. Journal entry rules. Total debits must equal total credits in order to save the journal entry. You cannot use products and services items in a journal entry. When posting to accounts receivable, you must specify a customer. When posting to accounts payable, you must specify a vendor. You may use multiple accounts receivable and or accounts payable accounts in the same journal entry. You can't mark an amount as billable to a customer. Okay. creating Chris's journal entry. So there's going to be a video here. We're going to read the steps first, and then we'll watch the video. Chris needs to log his contribution of the equipment to the business as a debit to fixed assets and a credit to equity. Watch the video to see how it's done. The individual steps are below for you to follow. Changes in the UI may not be reflected in the video. So 1. Select plus button on the top of the QuickBooks Online window. 2. Under Other, select Journal Entry. 3. Enter today's date. 4. Enter or accept the journal entry reference number. On the first row, add new account, machinery and equipment. 6. Select the type, make it fixed asset. Then add the detail type, machinery and equipment. Chris will be tracking depreciation on the equipment, so check the box that says track depreciation of this asset. Leave the original cost and depreciation fields blank. Then select Save and Close, enter a debit amount of $5,000, and enter a description to record a contribution of equipment. On the next row, select Owner's Investment from the drop-down list. The credit should automatically be populated with $5,000 matching the debit. Okay. So let's watch the video now.
Select Create Plus at the top of the QuickBooks Online window. Under Other, select Journal Entry. Enter today's date. Enter or accept the journal entry reference number. On the first row, add new account, machinery and equipment. Select the type, make it fixed asset, then add the detail type, machinery and equipment.
Go back one step.
Machinery and the reference number. No. Under Other, select
Other journal entry.
Enter today's date.
Let me see Miss Pearl message. I've done only a few deliveries with Grubhub, and sometimes I do Instacart, but that's not for me. Instacart's not for you, or Grubhub and Instacart isn't for you specifically. But yeah, I haven't been doing the gigs so much right now because I've been kind of focusing on studying, and I have a new job that I've been there for the past couple of months. So I've been kind of focusing on that, focusing on this, trying to get my side business up and running. So my new job is not that close to where I live. Like for instance, this morning getting to work took me 2 hours to 2-hour commute to get there. So it's a good, I'm putting in 100 miles on my car. So, once I'm done with this, and if I have time in between, doing my side, working on my side business, I might jump back onto do more food delivery and stuff. Yeah, Grubhub can be stressful. I actually read online, someone posted on the subreddit for Grubhub that they received one of those Grubhub driver card orders. So this is the orders where you as the driver have to place the order and then buy it using the Grubhub card. Well, this driver placed the order over the phone. Then he went to the restaurant to pay for it. He gave the Grubhub credit card, and the restaurant refused to take the card. And they demanded payment, so they demanded for the driver to pay. The driver didn't want to pay because Grubhub wouldn't reimburse them. So the cops were called. The guy received a ticket, and there you have it. He received a $177 ticket, and he didn't even get the food or paid by Grubhub. So could definitely be stressful at times, and all the running about. But yeah, but I might jump back into doing Grubhub after work a little bit. If once I get more acclimated with my current job, once I'm complete with doing this stuff, and if I have a little bit of extra time. But yeah, let's continue. Yeah, it is incredibly insane. So right now, that guy, from what I read, is seeking he's engaged a lawyer and seeking recourse regarding that. So we'll see what happens with that. I'm going to continue to monitor that situation because that's actually something that I brought up as a potential problem occurring, but it was kind of dismissed by everyone. the restaurants, they're not going to care enough to like bother with that. But there you go. So apparently we do have a restaurant that cared enough about it to call the cops and make a big issue out of it. So we'll see. We'll continue. I'm going to continue watching it and see what happens to that guy. But let's watch this video. I had a problem once with a gentleman trying to flirt with me during a drop-off. Oh no. I'm sorry to hear that, Miss Pearl. I can imagine that's something that's a fairly common occurrence for women drivers, and I can imagine that being kind of scary, or just like an uncomfortable situation that you have to be placed into. Actually, I have like this kind of weird, funny situation myself, where I came to drop off a delivery at a house, and once I got there, there was an elderly woman on a wheelchair, and she was basically half naked. She invited me. She told me to come in to put the food away. She invited me to put the food away, and then I was like trying not to look, because she was just in her underwear. So I just tried to put the food away and quickly leave the house. But once I dropped off the food there, she didn't let me go right away. She started talking and just making small talk about banter about random stuff, about restaurants I've been to, and have I ever tried this cuisine or this food. And I was standing there comfortable, trying to look away from her so that I'm not seeing what was going on over there. So that was my kind of uncomfortable situation that I was placed. And yeah, that's right, Miss Pearl. A lot of guys can be worse than dogs. What do you think, Debbie? All right. But maybe I was thinking that maybe she just wasn't all there. I mean, I'm hoping that's all it was. Okay, but yeah, and from my understanding, a lot of the female drivers, they don't like leaving their cars when they do the drop-offs, and I guess that's part of the reason why the reason that you mentioned, because they don't want to be put into that situation where they are being hit on or being kind of put into a weird, uncomfortable situation at someone's house. But yeah, it can be scary. It's, definitely. I mean, you're going to random people's houses. You don't know them, so yeah, I can definitely see that being a little bit stressful. Yeah, Debbie, that definitely is stressful. I'm sorry, and I'm sorry on behalf of all men. I'm sorry to all women who have to experience things like that, because it's something that really shouldn't be something that you have to face on a day-to-day basis. I'm sure Miss Pearl says, "I'm sure men are always trying to get to you, Debbie." Yeah, I think that's true. What do you think, Debbie? All right. So let's watch this video.
Journal entry reference number. On the first row, add new account.
Oh, thank you, Miss Pearl.
And equipment.
I appreciate it.
Select the type. Make it fixed.
And you're a sweetheart.
Then add the detail type, machinery and equipment. Chris will be tracking depreciation on the equipment, so check the box that says track depreciation of this asset. Leave the original cost and depreciation fields blank. Then select save and close.
Let me see that again.
Fields blank.
How do you do that?
Original cost and depreciation fields blank. Then select save and close and equipment. Then add the detail type, machinery and equipment. Chris will be tracking depreciation on the equipment, so check the box that says track depreciation of this asset. Leave the original cost and depreciation fields blank. Then select save and close. Enter a debit amount of $5,000 and enter a description to record a contribution of equipment. On the next row, select Owner's Investment from the drop-down list. The credit should automatically be populated with $5,000, matching the debit above. Enter a description matching the debit above. Select Save and New or Save and Close.
Alright, that video is done. Debbie says, ha ha ha, some men are just nonsense. And yes, he's a rare man. Aww. Thank you, Debbie. You're a rare woman. And Miss Pearl, too. You're an exceptional woman as well. Alright. Let's continue. Adjusting journal entries. Adjusting journal entries are often made at the end of an accounting period before financial statements are produced for the company. Only you, as Chris's accountant and an accountant user, can mark a journal entry as an adjusting entry. There are few scenarios where journal entries are usually marked as adjusting entries. Select the headings to find out more. Accrued expense. Accrued expense. These are expenses you've accrued but haven't paid yet, like a loan, interest, or accrued payroll. Accrued expenses appear on the balance sheet as liabilities. Okay, deferred expenses. This is where you paid for something but not yet realized the benefit. An example of a deferred expense would be if you pay for your insurance a year in advance. The deferred expense appear on the balance sheet as assets. Accrued revenues. This is where you've earned the revenue, but the customer has not yet been invoiced. A common practice in many industries is that in many industries that work on long-term contracts, these appear on the balance sheet as accounts receivable and asset account. Miss Pearl says, "Thank you. You're very sweet." You're welcome, Miss Pearl. Well, I'm that way because when I was young, my mother dumped me into a barrel of sugar. What can I say? I have to thank my mother. Deferred revenues. These occur when you've been paid in advance by a customer, but haven't finished the work yet. This appears on the balance sheet as unearned income, a liability. Non-cash transactions. Not all expenses are cash expenses. You didn't like that one, Debbie? Not all expenses are. It's too. Miss Pearl seems to like it. Okay. Not all expenses are cash expenses. Some things represent expenses that don't have a cash effect on your business. Depreciation and allowance for doubtful accounts are two examples of common non-cash transactions. If regular adjustments aren't recorded to reflect these activities. Miss Pearl says that was a good one. See, Debbie? Miss Pearl likes it. Thank you, Miss Pearl. You appreciate a good joke. Let's see. If regular, depreciation and allowance for doubtful accounts are two examples of common non-cash transactions. If regular adjustments aren't recorded to reflect these activities, it's easy to get a skewed picture of company financial position. Here's a quick example. Chris has an annual loan interest payment due in June, and no liability has been accrued for it during the year. Chris could easily overestimate his available cash if he doesn't keep track of his growing current debt. His profit for each month will also be incorrect. Also, when he makes the annual business insurance payment and it's accrued, the monthly insurance expense will be reflected in the wrong accounting period. Debbie says a candy man. Yeah, I got a I got a big sweet tooth, so that's my problem. That's my vice. It's probably why I have all my cavities. The monthly insurance expense will be reflected in the wrong accounting period. As an accountant, you can set these adjusting journal entries to post automatically using the recurring transaction feature in QuickBooks Online. That way, you know that most, if not all, of the necessary adjusting entries are reflected when viewing monthly financial reports. To mark a journal entry as adjusting, you enter the journal entry as normal and check the is adjusting journal entry checkbox. ProAdvisor tip: only you as QuickBooks Online user accessing a client's account through QuickBooks Online accountant can see an adjusting entry, so only you can see the checkbox. Okay. So lesson check. What would you use as an adjusting entry to account for depreciation of an asset like a company car or van over several years? Yes. To record a late payment of an invoice outside the 30-day payment terms? No, I don't think so. To account for a loan payment due in the next financial period? I think so. That's right. An adjusting journal entry is used to account for expenses or income not already recorded by other accrual or cash transactions. In addition, like the van depreciation, it can divide amounts between two or more accounting periods. Ms. Pearl asks Debbie, how tall are you? ProAdvisor Challenge. For our ProAdvisor Challenge, we'd like you to record a journal entry for your client, Craig. Okay, so this is going to be a quick one. Let's go here. Problem is, I don't see where this plus sign is supposed to be. Oops. That probably messed everything up here. So we're not going to be able to do that, I don't think. Oh, here. No. Because it's directing me to... It's directing me to a thing that doesn't exist. The heck? The plus sign. Let's see. Debbie says, oh, I'm 5'5", my dear. Oh, and Miss Pro also says, oh, I'm getting out of topic of the video. Sorry. No, Miss Pro, we're just here hanging out. Feel free to move off topic. Keeps things entertaining and enjoyable for all of us. So yeah, feel free. Talk about whatever, topic you'd like to talk about. Doesn't have to be on the topic of the video. We're just kind of like hanging out here, having a good time with friends. So let's see. How did you do? I'm not gonna be able to do this. Let's see if I can find journal entry here. No. I don't know what's going on here. But this would be how you would do it. So the challenge is using the link below, record a journal entry. Craig has a laptop that he owns personally, which he is donating to his business. The value is $500. Record the contribution by creating a debit of $500 to new fixed assets account type. Detail type, fixed asset computers, call the account laptop. It should be tracked for depreciation. The credit should be the owner's equity account, which you'll need to create as account type, equity detail type, owner's equity. Okay. Summing up, learning outcomes. Well done. In this lesson, you've learned how to recognize, how to utilize journal entries. ProAdvisor tip: there is a special report in QuickBooks Online Accountant called Adjusting Journal Entries. You can use this to easily find all adjusting journal entries clients have entered. Checking the adjusting journal entry box adds the adjusting journal entry report to the column on the adjusted trial balance report. next steps in the next lesson, you'll help Chris set up a transfer between accounts. And I'm going to call it a night. We've been running for a little bit under an hour, and it's getting late over here. It's past 10:30 right now. So that's going to be it for tonight. So thank you everyone for joining me tonight. Special shout out to Debbie Machado. Special shout out to Miss Pearl. Thank you for joining, and thank you for the good conversation. It's always a joy to have you, and you're welcome to come whenever. So, all right, guys, it's been fun. It's been real. You're tall. Miss Pearl says you're taller than me. I'm 5'4". Okay, well, it's good height. I'm 5'9" myself, about 5'9", maybe around that range, depending on the time of day. But yeah, okay, guys. Yeah, it's been real. It's been great. Good night, Miss Pearl. Good night, everyone else. If you enjoy the content, feel free to hit that like button, hit that notification bell, and hit that subscribe button. So until next time, you guys stay hustling, work hard, work smart, and have a good one. Good night, guys.